All right, let's get straight to it. Think of this as a financial intelligence briefing. We're analyzing a breaking event that has massive implications for Treasury risk and, frankly, the entire global financial system.
So let's set the scene. The date is January 3rd, 2026. Just a couple of days ago, an event unfolded that basically validated an entire decade of strategic financial warfare.
You're seeing it flashing across every news screen on the planet. Nicolás Maduro, the president of Venezuela, has been captured. He was taken by U.S. forces and flown out of his own country. A superpower, at least on paper, has just been decapitated.
But here's the critical thing to understand. This wasn't the result of a conventional war with tanks and jets. No, this was the endgame. This was the final move in a long, methodical, and absolutely devastating campaign of financial suffocation.
So you have to ask, how did we actually get here? Because Maduro's capture wasn't the opening move. Not even close. It was checkmate in a game that was really decided years and years ago.
Let's start with this number, 303 billion. That's billion with a B. That is the number of barrels of proven oil reserves that Venezuela was sitting on. We're talking 17% of the world's total supply, the largest on Earth.
And in the end, you know what? It was completely worthless. This is the story of how you can own the world's most valuable commodity and have it mean absolutely nothing when the power to actually sell it is taken away.
So what was the weapon here? It wasn't a carrier group, it wasn't an army. It was the financial architecture itself. The invisible plumbing of global commerce that we all use every single day, but very few of us truly understand.
At the very heart of this is a concept called correspondent banking. You see, most dollar transactions, even between two countries that aren't the U.S., have to touch a U.S.-regulated bank to get cleared. The U.S. doesn't just print the dollar. It owns the very rails that the dollar runs on.
And this is the perfect way to picture the dynamic. Imagine a marketplace. Venezuela owns the biggest warehouse, right? It's just stocked to the gills with all the oil everyone wants to buy. But the United States owns the only cash register in the entire market. Every single sale has to go through their machine.
Now, what do you think happens when the owner of that cash register decides you're cut off? Well, the warehouse is still full, the product is still sitting there, but you can't get paid. All of a sudden, your biggest asset becomes your biggest liability.
For every single CFO and Treasury manager watching this, what happened next is a masterclass in systemic risk. I mean, this isn't some academic theory. It's a real-world stress test that played out on a national scale. Just look at the data. It's breathtaking. Oil made up 95% of Venezuela's export revenue. The second their access to the dollar was choked off, their oil production just collapsed, down 77%. To pay its bills, the government started printing money, and that triggered 5 million% hyperinflation. The country was economically erased.
And this maps directly to the core risks you worry about in your own treasury. Concentration risk, 95% of your revenue coming from a single product. Settlement risk, trading in a currency you have zero control over. Custodial risk, holding your assets in foreign countries that could freeze them. And the big one, counterparty risk, a total reliance on a banking network that could, and did, cut you off overnight.
This right here is the core lesson for any finance professional. Venezuela owned 303 billion barrels of assets, but they had zero liquidity. You see, assets on a balance sheet are completely meaningless if you can't access them to actually operate. Now, this event isn't happening in some kind of vacuum. The fallout is immediate, and it is triggering a global race to de-risk. Literally, as we speak, India is trying to figure out how to recover $1 billion in unpaid oil dues from Venezuela. Analysts at Goldman Sachs are scrambling to model what a post-Maduro world means for oil production. And you better believe every finance ministry on Earth is asking, could this happen to us?
So the main strategic response we're seeing has been a massive acceleration. A global race is now officially underway to build financial systems that are not dependent on the US dollar and its clearing mechanisms.
And look, we are not talking about hypotheticals here. China has built SIPS, its own payment system. Russia has SPFS. India is pushing hard for more trade settled in rupees. These aren't just little side projects anymore. They are strategic national security priorities, all designed to create an alternative to the very architecture that just took down Venezuela.
And this brings the whole analysis right into the boardroom.
The question is no longer just for nations. It's for any multinational corporation that deals with complex supply chains and cross-border cash flows.
Take a look at this timeline. The financial actions began years ago. The oil embargo in 2017, the really critical sanctions on their state oil company, which froze $7 billion in assets, happened back in 2019. The military action in 2026, that wasn't the start of the conflict. It was the end.
This is the ultimate result. It's not about confiscating assets, it's about denying access to the system that gives those assets any value at all. For Venezuela, the final message from the global financial system was simple: access denied. So, to be perfectly clear, the world saw the military strike, but that was just the epilogue. The story was written chapter and verse by the financial architecture. It proves that resources don't create power, architecture does. And that leaves every CFO, every treasurer, every head of state with the same unsettling question. As we all assess our own dependencies, our settlement currencies, and the rails our value runs on, we have to ask, are we next?
This is the new battlefield. It's where geopolitics meets treasury risk. Understanding this architecture is no longer optional. It is fundamental to survival.